A, B, C. A always B, B, C closing. Always be closing.
Hey, what's up, everybody? As you know, it's your boy Cam with Scare Money Don't Make Money podcast. Roy was unable to attend today, but that's okay. We have Gabe here, who I'm going to let introduce himself in a second, tell you guys what he's about. But before we get started, don't forget, click the subscribe button so you get the dings, the alerts, and all that type of stuff. Head to our Facebook, Twitter, Instagram. We're on Clubhouse now, trying to get the conversation started, especially for our military folks as they make that transition. So without further ado, Gabe, welcome to the show. We appreciate you, man. Tell the people who you are and we'll get started.
Yeah, Ken, thank you. I really appreciate you having me on and responding to my message because I reached out to you. My name's Gabe. I am the COO and co-founder of Challenger. We are a startup bank. So I actually started my career in banking. I worked on Wall Street and decided to make a change to try to create banking that actually helps people instead of hurts them. So I can get into all that. But Challenger is essentially a bank for employees. So we partner with employers and offer exclusive access to our no-fee banking product.
Like it. So more about you. So, where are you from? What did you end up going to school for? How did you get into, how did the whole Wall Street thing happen?
Yeah. So I grew up in California. I grew up in Southern
California.
Yeah. I went to school at University of Pennsylvania. And I wouldn't say fell into the trap, but at Penn there was a whole lot of people that are in the rat race of trying to get into finance and just do that whole crazy thing. And so I ended up in finance. I worked at Credit Suisse. I was a banker and a trader. And I think kind of early on, I realized that wasn't going to be something that really fulfilled me. Saw a lot of people that were making a lot of money, but not necessarily happy.
Correct.
That wasn't something that I wanted for myself. And I think on the other side of it, I was seeing kind of the evils of banking. There's a world that really is not great. $15 billion a year in overdraft fees, and banks have a kind of playbook for getting people into debt with loans, and there's a whole lot in there that didn't feel awesome to me. So I wanted to get out and try to create something that actually helped.
For sure. And so, what was the time frame? So, a lot of people say, before, I left, one of the guests we had, Ben, he became a recruiter, but after a year of kind of building it at his day job, and then obviously, the creator of Fubu, he said the same thing. Like, he worked at Red Lobster, right? And he's like, don't quit your day job, he's like, the day job got the hustle started, so what, give us your timeline of what, kind of how it all happened.
Yeah. I think something that I'll lead with is that I was in and am still in a pretty fortunate position to have family that I know would support me if I had to go crash on my I would have been able to do. But I was working at Credit Suisse, and about 10 months in, me and one of my best friends from high school, we started talking about the idea of Challenger, and we started to apply to a bunch of these accelerator programs. So heard of Y Combinator or Techstars. There are these kind of global accelerator networks where they help entrepreneurs and founders kind of grow their company. We were by far the earliest company that applied. We were, pretty much idea stage, and we had this crazy idea to change banking, and the managing director of the program liked us, and so we actually didn't get in at first. We were the 11th. So they take 10 companies, and we were company number 11. And then about a week before the program was supposed to start, they said, hey, one of the companies didn't make it through our due diligence process, so you guys are in.
Oh man,
Yeah,
this is a movie, man.
yeah. And so for me, it was, it was a very hard and very not hard decision because, I was 23, 22, 23 years old, and uh, yeah, 23 years old, and I didn't have a whole lot of responsibilities, and I figured that if it failed, which it still very well might, that I would be able to get back into the world of finance, which I will not. But at the time, that's what I was thinking.
Yeah.
Uh, and so, yeah, kind of made the leap and gave my 2 day notice at work instead of my 2 week notice,
Oh,
which was a little crazy. Moved from New York to Denver in about 2 days, and we started that program on that next Monday. Um, yeah, and the program's great. It's called Techstars. We went through the FinTech Accelerator program, and it was a 3-month program where they gave you access to mentors and really a network of people to support and guide you and
yeah.
just help you make it to the next level.
Oh man, that's pretty yeah, and I've never heard of that. And I'm sure a lot of people who are listening, there's a lot of programs out there like that you really kind of don't learn about until you like start researching. Um no, that's cool. So where are you guys at now? Like so how long when was that when you first started, and where are you at now?
Yeah, so that was the summer of 2019. And I guess one thing too that is not talked about as much in the startup world is how often things can change, especially in the early stage.
Hmm.
So we kind of always had a very similar idea of wanting to get better banking into the hands of people.
Yeah.
But that completely changed, and it's changed 3 times since the
No.
summer of 2019.
Okay.
And one of those changes was because of COVID. Um, and we're really happy with where we're at because this is, we've had the most traction and the best feedback on what we're doing now. Um, and so since then, so since COVID, we kind of decided to go this employer route where we'd partner with employers. So in the last just couple months, we've signed 5 pilots with companies that are wanting to do this with us and are paying us to give their employees access to this
Yeah.
product. Um, we have built out kind of the whole platform, the budgeting tools and savings tools, education, building and credit building, and really trying to make it the best banking experience possible. Um, we raised money, so post Techstars, we were able to raise from investors that really believed in what we're doing. Signed with a bank partner, so how it all kind of works from an infrastructure point of view is we're basically we basically pay a FDIC
Yeah.
a bunch of money. Um, they hold all the customers' funds, and then we kind of handle everything else.
Yeah.
So, uh, the movement of money and customer service and customer experience, and we built the app and the web app,
Yeah.
the mobile app, and everything. And yes, we've done all that in the last I guess year and a half.
Nice. So do you still live in Denver?
Still in Denver.
So is it as busy and expensive as people? Because I'm in California, so people are like, yeah, Denver's turning into San Francisco.
Yeah, it's getting there. Um, I will definitely uh, not say that I'm a local, but I've been here for a year and a half, and it seems like it's just more and more people coming in. It seems like Denver and like Austin are the 2 cities where there are always people coming in, especially right out of college,
Yeah.
early in their careers. But coming from New York, where I was in a shoebox apartment, this is a whole lot better out here.
Yeah. Oh yeah, I'm sure. What's the future look like right now? So you have these 5 pilot programs. So yeah, what's the future looking like?
Yeah, so we're set to launch in March. It's gonna be kind of the big thing for us is when we launch, do employees actually like it? Do employers feel like they're getting value out of it? Are we able to really save our our end customers on bank fees and help them save for emergency expenses and help them budget better and help them build their credit and help them learn about their finances. And that's going to tell a lot. I think being in the stage that we're at, investors really bet on us and that there's something there. And so I think that we are really excited with what we have, and time will tell to see if this is the exact road that we go on in the next 5-10 years, or if we are, if Challenger becomes something slightly adjacent in the months and years to come. So that's all something that we're figuring out.
Yeah. And so I know we talked about this, but I'm sure people would like to know is how do you guys make money? Because as you said, it's a no fee banking. So where does the money come from?
Yeah, totally. So it's a really interesting, the world of banking is really interesting. When if you look at the Chases or the Wells Fargos of the world,
Wells Fargo.
they make a lot of their money from huge clients. So from private banking clients, someone who has a ton of them, on big loans, stuff like that. So that's where they really want to make money. But they also make money is on fees from people that don't have all that money and don't have the huge volumes. And so that creates kind of a weird misalignment of incentives, where the bank, the only way that they're actually making money, real money from the customers that are lower income, is from fees. And so that kind of gives us an opportunity. And so we fundamentally make money in two ways. One of them is from employers. So every time we're able to sign on a new employer, they pay us a small fee per month for each employee that goes on our platform. That kind of make it a completely no fee experience. The other was actually through MasterCard, from interchange fees. So every time someone swipes their debit card, the merchant pays about 1%. So if you at Safeway, spend $100, Safeway has to pay $1 to MasterCard, and then we get some of that money from MasterCard. And the reason that that we are able to actually make money from that, and the Wells Fargos and Chases aren't, besides some regulations where, because we are really small, we actually get a little bit of a higher percentage from MasterCard versus them. But also it's because we're a digital bank. We don't have any branches. We don't have to all these employees. We're primarily a technology company, so we keep our expenses low so that we can make most of our money just from those small fees, not to the employee, not to the employer, but to merchants.
Yeah. And so I would imagine that like the incentive for the employer is, if, hey, come work for us and we provide this no fee banking stuff, we're a great place to work. I'm guessing that's kind of somewhat, that's probably the sales model, right?
Yeah, totally. So yeah, no, it's something that we are going to really be focusing on when we launch is there any implication on retention or productivity, or really employee satisfaction? Right? What we would love is to be able to go to a CFO of a large company and say, hey, look, your turnover right now is 60%. And if we implement Challenger, it'll go down to 50. And right there, that's, you're going to be saving $5 million in hiring costs every year. That's our goal. Because I think that financial stress, and from a lot of research that we've seen and done, is that when someone's financially stressed, they're probably going to be more likely to look for a new job. They're probably going to be distracted at work. They might be absent from work because they can't, afford a bus ticket or gas to get to work. And so we think if we can actually help with that's going to have implications for their work life.
Gotcha. And then I think when we spoke before, you said there's 5 of you guys, right?
There's 5 of us. So there are four of us that are full-time. 1 is part-time. Yeah, it's cool. We were just talking about this. Our core team, this core 5, has stayed intact since the very beginning, since day one.
Wow.
Yeah, since day one of that Techstars program. 2 of them were one of them was part-time and now they're on full-time, and we've had kind of contractors come in and out for, like a month at a time, but this core team has stayed intact, which is pretty cool.
So what does like a day, what's like a day look like for you? Is it business meetings? Is it reaching out to folks, like how you reached out to me? Like what are all your guys' responsibilities?
Yeah, totally. It's that's one of the funnest things about a startup, is that it is so incredibly fluid.
Yeah.
So, which is it's fun and not fun. So just last month we closed our fundraising round, and so that generally in the startup world, the CEO's job is to not run out of money.
Yeah,
So
right.
basically owns fundraising. Our CTO, he is the one who is building pretty much the entire app and infrastructure. So he has probably the most defined role. I have probably the most fluid role, where if we think that the most pressing thing is to get sales, I'm going to try to get sales.
Yeah.
If business development and just learning and talking to people, it's that. That's what I enjoy doing, because that's
Yeah.
where the fun stuff. If it's fundraising, if it's meeting with investors, I do that as well. If it's compliance, working with the bank, I do that as well. So yeah, it really varies day to day.
Yeah.
I always try to take time. I usually try to block off some time every single day to talk with interesting people and get their thoughts and feedback on what we're doing. I'm a big proponent of kind of generalization, like being a generalist and talking to people that have different
Yeah.
perspectives. Because I've been in a very narrow world of this startup digital banks.
Yeah.
I'm like become a resident expert in that, which is weird.
Yeah.
But
No. Yeah.
right, so it's always great. I learn so much from people that are, that can have fresh perspectives on everything. So I usually try to block off some time in my day to do that.
Yeah. Okay. So, when you were doing financials, so did you like when you went to Wall, did you get like, I forget what the test is called, but the test where you're like a certified like stockbroker and all that? Did you do all that, or was it a different path?
Yeah, there are these 3 tests that I had to take: the Series 63, Series 7, and Series 79.
Series 7. That's the one from like Wolf of Wall Street, right?
It's
And, yeah, and everyone's like, "Oh, I know what that is." No. So,
like,
um so with everything, do you still do stuff in the stock market?
I don't. Yeah, no, I don't. It's and when I was working in banking and trading, I was uh, you'll laugh, because it's like it's right out of The Big Short. But I was doing mortgage-backed securities, and I was trading CMOs, which are collateralized mortgage obligations, which are mortgage-backed securities within mortgage-backed securities within mortgage. Um, and yeah, I mean, I learned a ton. It was a really yeah. I think a lot of the stories are real, and they're true. I was working 100-hour weeks, and
Yeah.
um, uh, I managed to go without drinking coffee for the whole entire time.
Oh my gosh, man! I'm drinking coffee right now, bro.
Yeah. But I definitely learned a ton from it, and I wouldn't have traded that experience. I just knew that world wasn't for me long term.
Yeah. I will say I don't think I started drinking coffee seriously though until like I had children.
Yeah,
I think about that. I'm like, wait a minute. I didn't energy drinks though. I used to smash Monsters, but
yeah,
that was just like, but I liked them, I liked them because of the taste, I guess. I guess everybody
yeah,
says that, but like now, like I probably have at least a cup of coffee a day.
yeah.
Maybe 2 cups. And I think I was talking to my mom. She's like, "Oh my God, how do you have 2 cups?" I was like, "Well, I got my morning coffee and then I got my afternoon coffee, man. Like I got things to do."
So I might come over to that side as well.
Bring it, man. So, what I would say in the future, what's your goal? Like, so, obviously with the new year going on, everyone's like, "Hey, what are your goals, man? Like, you want to lose 10 pounds?" Like, so, what's What's one of your goals as far as, challengers is concerned? Is the amount of clients you want to have, or the amount of customers maybe you want to reach? Like, what's something, and then at the end of the year, I'm gonna message you and ask you about it.
It's funny, tonight we're actually, me and my co-founders are doing kind of like a vision 2021 vision.
There you go.
So
I like it.
I'll probably have a better answer for you tonight. But one thing that is probably a little different
Hmm.
is when all of us started Challenger, we really, our whole goal was personal growth and personal development. I
Yeah.
think we were all really aware that startups are so incredibly risky, and
Correct.
that a huge chance that 6 months down the line, or a year down the line, or 2 years down the line, it's no more. Um, and I think none of our goals is to make $10 billion.
No. Yeah.
That would obviously be great, but that was never our goal going in.
Yeah.
And so for me personally, um, I went from such a rigid world, to now being, wearing 100 different hats and sitting in 100 different seats, and that's been super invaluable to me. In terms of the actual company, I think we really are going to be focused on a product that people really, really love. Um,
Yeah.
as kind of corny as that may sound, we think
No,
if
man.
that's there and we're able to demonstrate that there's value there, that the clients will come, the customers will come, and yeah, really just have a good time with it, and I guess above all else, make sure that we're making a positive impact.
Yeah. No, I mean, and I think that's something that a lot of people, even though it's a general, like the personal growth, it's a general goal, but at the same time, it's a lot more specific than a lot of people want to get as far as themselves. Like everybody has like a financial goal, or they have like, I want to lose weight or something like that.
Yeah.
Um, personal growth is something I think a lot more people should should tailor for each year,
Yeah.
and that's not to necessarily say I'm going to be better at personal growth. It's just I would like to continue my personal growth. And I like what you said as far as staying focused, because you're right. I mean, with any bit, I mean, even this, our podcast, like how many podcasts just like go by the wayside after so long, and um, it's funny because do you know who Joel Lalgi is?
I know the name.
Okay, so he's yeah, so he's on LinkedIn. He's become a pretty good friend of mine, and that's something we were talking about, was as far as exposure, right? And so a lot of the, my other military recruiters kind of laugh at me with the podcast. They're like, "Oh, so what's up, scared money don't make money?" I'm like, "But you know the name though." and so you're right. It's exposure and building that platform. And
Yeah.
do you guys have like a Facebook and stuff like that? Like what type of outreach are you guys doing right now?
Yeah, we've been pretty stealth, just because we're pre-launch.
Yeah,
Our website is getchallenger.com.
yeah.
Um, check us out there. We actually just started a podcast as well.
Oh, what?
Yeah.
What's it called?
I guess just the Challenger podcast. Our first hire, our head of growth, he's really owning it, which has been fun, to see. He's had a couple people on so far, so
Yeah,
that's been awesome. But yeah, going back to the personal growth thing, um, I think that startups and just starting your own business, starting anything, like it could be as small as, like selling lemonade, like anything that, seriously, like anything that gets you out there and maybe out of your comfort zone a little bit, is so incredibly valuable, for personal growth. We have actually our two first our first two investors ever. Um, they uh, they started a company when they were like 20 something years old,
yeah.
because of their meditation teacher. So totally out there, but their meditation teacher said, if you want to personally grow, the best thing you can possibly do is do a startup. And what that, crazy enough, and what that led to was 15 years later, them not giving away any equity to investors and selling the company for $200 million. So
Done.
now they drive some nice cars.
Yeah. Can I get a ride, Brian? No.
But I really do think that putting yourself in those uncomfortable positions and pitching and telling people about your idea, I think that it really goes a long way. I hated like talking in public and just putting myself out there, and I've had to completely get over that fear.
Yeah.
And yeah, I think that it's really been fun for me to see myself and like what are my vulnerabilities and what are the things that I am still uncomfortable with, and what can I continue to work on. So that's been really fun.
No, I mean, there's so much to be said about putting yourself in an uncomfortable position for the purpose of personal growth. I myself was trying to do something, and I remember someone's like, well, maybe you shouldn't do that. And I was like, because it doesn't go along with how you normally are. And I was like, well, I don't want to completely turn off that opportunity. If anything, that should probably make me do it more, because then it makes me more well-rounded,
Okay.
But as human beings, no one likes to be uncomfortable. If there's anything I've learned through recruiting and reading and listening about psychology and things like that, we all just like the familiar. We're just like, let's all just be the same. And so, no, I like that though. I like, as far as really concentrating on those situations where there's a growth opportunity there. So as we reach the end of the podcast, there's two questions we normally like to ask people. And the first one is, and this is really nice for me because normally it's recruiters, right? So I'm like, hey, what would you tell a new recruiter who's thriving, whatever. But now I have made a point, once again, the whole uncomfortable thing is even though the podcast started out just about mainly recruiting and marketing, I was like, you know what? I want to get financial people on here as well. I wanted to turn into a more of a well-rounded, because the show is called Scared Money Don't Make Money.
Yeah.
There's so many different avenues that we can go down to with guest wise. I really want to make it a well-rounded show. And so you're my first financial guest. So welcome.
Thank
Awesome. And so as far as someone who is looking to start up, or maybe someone who is starting up, or maybe even someone who is trying to figure out, where can I make my place, what would be like the first advice that you would give somebody?
It's a really good question. On the more more high level meta side, I would say completely stick with it. This will all sound cliche, but I think if you surround yourself with people that have a very similar mission, that goes a really long way. So understand why you're doing it, and that can be for any reason. That can be for money, it can be for personal growth, it can be for clout, it can be for whatever. But surround yourself with the people that share that same mission. Stick with it. And if you are trying to do it for money, or something that you really want it to be a big company, on the more practical side now, do a lot of research before you invest your own time and money into it. So what I mean by that is, if one person tells you that that's a great idea, that's good, but that could be one person in the whole entire world thinks that that's a good idea. As much as you can, make sure that there's an actual market out there. One of my fellow founders who was in the Techstars program with us, his first startup was someone that gave him $50,000 to build this thing. And he was like, oh my God, this is amazing. Like,
it's going to work.
It's going to work. Like, so many people are going to want this. He found out that really no one else wanted it. And he spent 2 years of his life building this thing and quit his job and everything. And that was really hard for him because he thought that was the best signal ever, that someone wanted to pay him for something. And now he just raised $2 million on a new startup. And the first thing that they did was they talked to 300 different people about it. And they got really good signals from a lot of those people. And so I think that is super important.
Yeah.
Yeah.
Know your audience.
Okay.
And I like the surround yourself with people on the same mission, and that is something I had struggled with, honestly. Like, I'm very people person oriented, but a little bit about, I went to 13 different schools growing up, so a lot of friends, not a crazy amount of really really close friends. And as I've gotten older, I have obviously learn the value of certain friendships. And my wife has told me that well. She's like, I have noticed that as you have really locked down your circle and brought on people who are also on a path of just being better, it has made you better. And I really try that and instill that on people that I know. Is if you're having a crappy time or this or that, or you feel like, it's funny because you do have to look inside, but also look around you, because that circle can affect a lot. Um, so second question is, when you hear the phrase "scared money don't make money," what does that mean to you?
Yeah, I think it very closely embodies what my journey has been. Going from making six figures out of college, which is pretty rare.
Very.
And then quitting that job to be less than $15,000 a year. And I think that if that was something that completely deterred me, I wouldn't be in the position that I am now, and I wouldn't be in a potential position in the future to be making a lot more money.
Yeah.
And yeah, I think that I think one thing, going back to like putting yourself out there, it's very hard to get big wins if you're not also prepared to have big losses.
Oh, I like that. That's the name of this episode.
Yeah. Yeah. And for me, that was, I was truly prepared to be unemployed and have, be a quote unquote, have started a failed business and have that go nowhere. I was truly prepared for that to happen. And I think that if I wasn't prepared for that to happen, I was thinking when I was quitting my job, I was like, should I see if I can have like okay, would it be possible to say, can I come back in 6 months if like it doesn't, like you're always like trying to put contingencies in your mind. And I think if I would have pushed for that, and like, even there's no way that they would have done that, but if that would have happened, I think there always would have been like the safety net in my mind. And although that's great, and I understand I'm extremely privileged to say that, being being in the position that I'm at, but I was really prepared to quit my job and have not a whole lot going forward. And that's why all of us with the team have been willing to put ourselves on the line for that. And we think that it's paying out well.
Yeah. I mean, it's the whole phrase, like, if you have a plan B, then plan A will never work out. Obviously, that's not true in all scenarios, but in a scenario like this, where you really have to kind of give it your all, like, like you said, you got to be ready. Well, great, man. So, this is kind of your time for self-promotion. We always try and give all our guests the opportunity to, tell people where they can find you, any last minute plugs. So, the little end is yours, man.
Awesome. Yeah, no, I appreciate that. Yeah, check us out at getchallenger.com. Yeah, hopefully we'll be putting out some blog posts and everything where you can follow the journey. But the more important thing that I want to say is if anyone has a business idea, or they want to need any help to get started with anything, feel free to reach out to me. Gabriel Rapoport on LinkedIn, or LinkedIn's probably the easiest. I think especially in the startup world, it can be super scary. And if you don't have that support, it's even scarier. And so there are a lot of people that really helped me. So if there's anyone that needs any help, any suggestions on books to read or people to talk to, I would love to be someone to help there. So yeah, that's it.
All right, man. Well, hey, once again, we appreciate you. Scare Money Don't Make Money show. It's been another one, and we will see you guys later.
Cam, I appreciate it. Thank you.
Later, bro.
Indulge and to learn about ourselves.